Good morning, everybody, and happy Friday. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So it is Friday morning. We've come to the end of the week. One more day of trading here until the weekend, and markets are looking slightly higher. Now, the problem is that yesterday we were looking slightly higher as well. In fact, pretty nicely higher. S&P futures were looking up about 40 points, and we saw a fade, and the S&P closed negative. Now, if you look at the last 9 trading days, we have had 7 trading days where we've opened higher and closed lower on the day. So there's been this theme that I've talked about with you guys that ultimately signals institutions unloading in the early portion of the day after the gap up in the market. So you have retail investors who are very bullish right now that are continuing to put money in the market, and institutions lurking to dump into that. Now, that again, it doesn't mean the markets are topping. It doesn't mean the markets have topped, but it is a warning signal. Another big warning signal is the amount of selling that insiders are doing right now, folks. And again, I have never seen, well, maybe not never, but maybe before 2008, that was the last time there was this much massive unloading in from insiders and CEOs. So things like that definitely catching my eye here in the data. Now, obviously, that's what we focus on here at verifiedinvesting.com. It's all about the data, no BS, just charts. All right, let's get into the action today on this Friday morning, flipping into the charts. The markets, again, like I said, are slightly higher on the day. You can see, again, this was yesterday, right? So yesterday we opened higher, and basically a majority of the day was just consistent selling. And then we did see late in the day, around 2:30 p.m. Eastern time, we saw a move back up with the markets closing right here. Now, if we put a trend line in, like I always do, just to give you a visual perspective on where markets are, you can see we closed around 63.67, and we're currently trading around 63.81. So that's about a 14-point move up in the S&P that is slated for the open at this point. So again, that would be $1.40 on the SPY. So very minor gap up, but the big thing that we'll be watching is, do we see that same sort of fade today where the markets open higher and we see a sell-off and the markets turn negative? Now, flipping over to the S&P itself and going to the daily chart, this is something I talked about yesterday. Remember, we were gapping up sizably yesterday, and I said, guys, watch to see if we see a fade on the S&P. And lo and behold, we did see a fade. Now, listen, the S&P was only down 5 points on the day, barely 0.1%. But after gapping up 0.75%, that was a big reversal on the trading day. In addition, it held the bear flag formation. So remember, here's your big reversal candle right off of a major parallel that goes back to the major pivot low in October of 2023 to April 2025. You stretch that line right up here, and exactly the gap up on the back of Meta and Microsoft earnings. We tagged it and had a big engulfing kind of reversal candle. We saw follow through on the non-farm payrolls the day later. And since then, it's been a sideways to slight upside float. Now, again, as I've talked about with you guys many times over, when you have a sharp down move in price, and then you see something like this in technical analysis, that is known as an in spirit of bear flag, and probability is about 65 to 70% right now that it will play out to the downside. Now, remember, 65 to 70% is not a slam dunk, but it is the favored move in the market or in this chart. And again, just to show you guys, again, very clearly, there's your upside down flagpole. And then here would be your essentially your bear flag formation, right? Just that consolidation here inside of this bigger down move. All right. So again, listen, it doesn't mean that's what has to happen. I'm sure many people disagree, but I am here to only talk about what the probabilities are telling us. And it's important for us all to understand that it is only probabilities and not certainties. So it's what is favored to happen, not necessarily what is 100% guaranteed to happen, right? And that's the key, right? I'm a trader, and I'm a day trader and a swing trader. And so for me, as long as I say to myself, okay, let's only take our trades that are 75 to 80% success rate. What I know, if I always take those, if I take 100 of them, if I take 1,000, if I take 100,000 of those trades, I will win 7 to 8 times out of every 10. So I'm still going to have those 2 to 3 losses out of every 10, which is fine because as long as I'm banking sizably on those 7 or 8, that is fine to have some losers. And we all have losers, folks. I certainly do. There's no trader out there that doesn't. If you find a trader that says they never lose, that's definitely something to be a red flag. All right. So let's get into the charts again, guys. Back to the charts we go. The 10-year yield is continuing to form another pattern. Notice this pattern is almost identical to the pattern on the S&P 500. And it's not that the S&P and the well, it's part of it is, to be fair. There is a connection here between the 10-year and the S&P. But my point of pointing this out is that I want you guys to start recognizing patterns. Pattern recognition is one of the paramount factors of being a technical trader that doesn't rely on emotion, that instead relies on probability. And you have a breakdown here of the wedge pattern and an inside bar pattern. What does that tell us? It doesn't tell us it's going to reverse today. It tells us that whenever this pattern resolves itself, there's a 70 to 75% chance that we head lower and a 30 to 35% chance that it spikes up. So the odds are, if you had to place a bet in a casino and you knew those odds, we would obviously be all putting it on the downside move factor in the 10-year yield. Taking a look at the DXY does not have any of those patterns, the bear flag pattern at least. What it does have is this downsloping parallel. Now, what's interesting about the downsloping parallel is that eventually downsloping parallels break to the upside, but you don't know when. It could stay within this parallel channel for a really long time. I mean, it could stay all the way down here, which means it is still in a downtrend and needs to be respected. All right. The only thing I would do here is if it comes to the bottom of this downtrend, right? If we take a trend line, let's say price falls all the way into this level around 95, I would be a buyer of the DXY here as a currency trader. If you're a currency trader, you'd start to buy the dollar there and maybe short the euro, right? Or do something like that, or the yen. But aside from that, there's not much to do. There's no pattern within here that would tell us, oh, there's a bear flag forming. Now, if all of a sudden we start going like this, right, and we have this down move and this, and we're coming into this down sloping trend line, we now have a resistance with a bear flag that would raise the odds of a move down, and you could actually trade that very accurately to the downside. But we do not have that at this point. And it's important to not speculate, right? It's just, what is the chart saying as of today? What are the odds as of today? That's all we want to do. Okay, let's go into the NVIDIA chart. I just want to keep this on our purview, on our viewpoint. And the reason why I want to keep NVIDIA on our viewpoint is because, number one, you got a reversal candle here. I thought it was interesting that we gapped above that high, or we went above that high yesterday, but then closed lower. But more importantly, it's this trend line, guys. This trend line, NVIDIA is technically safe from a technical perspective, and it is in its uptrend as long as it does not break that trend line. Now, you can very clearly see it keeps coming to the trend line and hitting the trend line and bouncing up, right? But the key will be if it ever breaks, or when it breaks, that would be the beginning of most likely a bigger down move in NVIDIA. Now, listen, it might only be 10%. Who knows? But the point being is you would expect once that trend line breaks to break down more so. I wanted to touch on Microsoft's chart. This is a very important technical lesson for us all. This was something that I utilized to add to my short on Microsoft when it gapped up on last Thursday. You can see the parallel channel. So what did I do? I used the parallel channel to my advantage right here to add to my short on this. And ultimately, notice how the stock had been grinding up. It was at all-time highs going into earnings. When a stock is at all-time highs and they report earnings, even if it gaps up on earnings, there's a tendency for profit takers to come in. When you add the parallel resistance into that, the odds are even higher. So again, for me, when I added to my short up here on Microsoft, all right, that was a probably 80 to 85% success that it was going to be a pullback in the stock. And that's exactly what we got. And now I'm basically break even on my short, and I'm still holding it because I think this is going to go down. Now, just like NVIDIA, we need to watch a trend line. Look at this, guys. I mean, this is incredible. I mean, look at this trend line on Microsoft. If you want to, again, follow when this does break down, I mean, look at all these hits along this trend line. It's a thing of beauty here. In regards to this. And yesterday, what did we do? We hit the trend line again. So this would dictate that you're either going to break the trend line today or you're going to start to get a bounce, right? Because you're at the line. It's game time. which way is it going to go? Right now, again, pre-market, it looks like it's flattish to positive, slightly positive on the Microsoft chart. But again, just like Nvidia, it's at a key technical level where again it's still on the cliff. It's not over the cliff yet. It's still on. Therefore, it still technically could go and grind up a little bit, although the odds of it taking out this high in the near term are very, very low. Let's take a look quickly here at Meta. Meta's another case. Now, this one did gap up, but again, interestingly enough, you can see it did gap up to all-time highs and stalled right out at this beautiful trend line. Look at this trend line, by the way, it goes all the way back here. But this one's held up well. Now, it has come in since earnings, but it's holding up. Now, watch to see, do we start to fade or do we reattack? But basically, the 790 level will remain resistance. Okay, so next up, guys, we're going to get into trades that are actionable today based on their earnings. All right, so we're in the midst of earnings season, although actually towards the end of it, we're kind of this week was the biggest reporting week. Last week was the mega caps, except for Nvidia. Nvidia does report at the end of this month, so we'll have to watch for that as well. But again, nonetheless, let's get into these earnings trading setups today. All right, so first one's going to be TTD. Look at the drop on this thing, guys, down over 30%. Their guidance was weak and their CFO resigned. Never good when a company has their CFO resign. Now, I do have two levels that I've annotated for you guys. There's a gap fill here at 56.50. We're only about $2 away from that. That would be a day tradable level. And if we dump out a little bit more, 54.25 will be major support. Now, these are both day trading levels. Please understand, I will tell you if it is not a day trading level, if it's swing trading level. Aside from that, every trade that I go over in the pre-market should be assumed as a day trade level. All right, so again, both day tradable levels here. If it hits here, maybe a small position I'll take. And if it goes down here, I'll dollar cost average. I would expect a bounce off of this lower range here just because the stock is getting so beaten down. Now, if we zoom out, where would a swing trade potentially be? Well, for me at least, there's this lower pivot around $40. I know that seems like a lot to the downside, but I would just point out that if you have a stock that is already down at the lows or near the 52-week lows and the stock market is still at its highs, what does that tell us? What will happen if the stock market just has a 5% correction? The weak stocks will get weaker, right? And so you'd assume that to go lower. So I want to really encourage you to understand that is that, just because a stock is at its lows doesn't mean it's a great swing trade. Now, if you have the technical factors, of course, then it could be, but you just want to really evaluate it and make sure you have those technical factors. All right, here is Twilio. Twilio getting hammered on earnings. And by the way, folks, there were a few stocks that went up on earnings, and we'll look at a couple today that are up on earnings, but a majority of stocks sold off this quarter on earnings, even though most beat earnings numbers. And the key here is, again, they beat, but most of the stocks had rallied up 50 to 100%. So it's like, okay, well, does the beat justify the continued move? If we go to the daily chart of Twilio, look, we've already breached this 103.75 level. So I'd be very careful there now since we're below it. This 96.60 level looks good. There might be a swing trade at this 90.5 level. Nice longer term upsloping trend line. But again, Twilio is getting hammered on earnings as well. Another one dropping. Take a look at Pinterest. Big fall initially on the earnings report yesterday, popped back up. It's starting to fade. Basically, if we go to our daily chart, I have a zone here to 31.90 to 30.50. Now, yesterday on the quick flush, right as they reported, it did get down to this high end of this zone, and then it saw a big bounce. But nonetheless, this zone here, 31.90 to 30.50 on Pinterest, PINS, that should be good support in that range. All right, so 3 stocks that have been absolutely annihilated. Let's look at some stocks that are actually up from yesterday after hours. Here's one, Block reporting. It has already faded. Notice my trend line right here. If we flip over to this is really the only level that I'm thinking about at this point, $85.25. It already pierced it yesterday after hours and backed off. But again, you can see this area right here. You can actually extend this trend line a little bit all the way to this area right through here as well. See how that works right there. So 85.25, that will be resistance I will keep an eye on. SoundHound gapping up on earnings here. Beautiful move. If we go to the intraday, you can see great rally and continued rally. Small pullback here in the last 30 to 40 minutes, but still very nicely to the upside. Again, they had solid earnings, better than expected, I should say. The only level I would consider shorting would be at 15.35. 1535 still about $2 away, so it would have to go up quite a bit more. Now, some people would say, oh, well, why don't you buy it here? Well, of course, I'm not going to buy it up 20+% because I don't know if it's going to get to 1535. It could, for all I know, it'll sell off at the open. But what I know is that the odds favor that gap fill with an extended move like that. Odds here would favor a potential short for a day trade at 1535. I might be able to net 50 to 75 cents even at that level if it comes into that during market hours. Again, guys, very important to understand the factors, right? So again, always understand that it's not necessarily about, oh, well, I'm going to short it up here, so I should really go long up to there, because you don't know if it's going to go up that high. It's just where, at what pivot on the chart do probabilities get high enough, meaning 75, 80%, that I'm able to get in a trade and make money. Now, it could be on a downside too, a fall like on TTD or Pinterest or any of these others, Twilio. So if they fall, it doesn't mean I'm going to go short here because I think it could go even lower. It's okay. Well, it's already down massively. It might bounce at the open and it just might go straight up for all I know. But if it gets down to this level, that's where the opportunity is great enough. The odds favor a big enough chance of a bounce where it's worth me putting hard-earned money to work as a trade. Very, very important, guys. All right. A couple more stocks. MP. This one is popping. Look at the daily chart, guys. It's a vertical chart and it's rallying again today. This is actually one of my favorite shorts. I have no levels on this per se. The only thing you could probably do is just connect these recent highs right through here. But for the most part, when stocks are up this much, this is an a la Microsoft type gap up, would not be surprising to see this thing fade and go negative today. But again, I don't have any levels. It's in uncharted territory, but I just like to point these out so that we can watch how they react when they come out with earnings or when the stock market opens. And then lastly, on the earnings front, take a look at Under Armour. This is now a very small stock. Used to be one of the most popular, biggest retailers at one point. But again, it has fallen from grace down, getting crushed again pre-market. The day tradable level for me, classic double bottom at $4.80. Only about 50 cents lower. Could easily hit that today. All right, let's get into crypto, guys. We're off to the crypto race here. Bitcoin, look at this, guys. We talked about Bitcoin going back up right to the scene of the crime right here, right? This was all this sideways chop, and it broke down, kissed support, and where does it go? Right back into that level. Today, it's getting a small pullback. Now, listen, there's nothing to say that it cannot break back in here and even make short-term new all-time highs. But I play odds. I play probabilities, and probabilities tell me that there's resistance here, so there's a likely chance of a pullback. We're seeing that right now, at least intraday. We'll keep an eye on that in the after hours or throughout the course of the day and really the course of the weekend as well. Ethereum is hammering, or ETH is hammering on this 39.50 level. I think this could go a little bit higher and at least pierce 4,000, but it is right into this resistance line. So monitor this area right here. Let's see, does price break out? If it breaks out, I think you go to this double top at around 4,100, guys. 4,100 would be your upside near-term resistance. And again, if it does, then 4,100 would be a level you'd start to watch as resistance. But the fact is, this remains very, very strong. In fact, ETH has been stronger than Bitcoin in recent weeks based on the price action. So again, we'll see if that continues. All right, let's move on to commodities. Let's take a look at gold. Gold again, right up into that little retrace trend line here. Now, we did see that there were some tariffs announced on gold bar imports, which drove gold up yesterday. But today, again, you can see the trend line of resistance is working. Remember what I said. I love midterm and long-term gold. But shorter term, I have to respect the lines. The trend lines are my friends. And therefore, I have to understand that there could be a pullback off this level in gold. Let's look at silver here real quick. Silver continues to be flattish today, continues to kind of make an upside move here. Now, this isn't a great bear flag or in spirit of because it's a little too vertical. All right. So again, it's not great. It's still technically an inside bar pattern, which is slightly bearish. But the basically, let me give you guys a quick, and I don't have a lot of time here, so I got to keep it pretty snappy. But basically, a quick educational point is when you have a right angle, that's the optimal bear flag, 90-degree angle. As the line gets a little bit more steep, the odds slowly decline of the success rate, right? So the point being is that best is 90 degrees. This would be second best, where still it favors it. Third best still favors a down move. Once you get too vertical, this is no longer an in spirit of. It could be an inside bar, but inside bars can be like 50-50 or 60-40, right? This is the ones I would take. And again, this is a lesson from the Winning Trader series. If you guys have taken it, you know this already. But basically, you're looking for 90 to 45 degrees. And that's the kicker there. So just be aware of that, is that angle does matter in trading. And if you can understand it and analyze the angle, you understand that the odds adjust accordingly. And that's super, super important. All right. So just a quick little lesson there, guys. Let's look at oil. We'll get to oil and natural gas. Oil again broke down here. We did not confirm technically below this trend line, but obviously 6 days down in a row, I wouldn't be surprised to see a small bounce in oil. I still think based on this, as long as we don't get back above this yellow trend line, we are probably destined to hit $60 a barrel in the not too distant future on oil. Next up and lastly, natural gas. It continues to just chop just above technical support. Again, 1 hit, 2 hit, 3 hit, 4 hit. The fourth hit is 50-50 in terms of a breakdown or a bounce. It's getting a small bounce. If it comes down again, the odds will shift to favoring a breakdown. All right. So again, fifth hits start to favor by about 60-65% chance of a breakdown. If you bounce again, the sixth hits then go to about 70 to 75% chance of a breakdown. And this is all nuanced, right? I mean, this is all like information that literally makes you look at charts a totally different way. It's very, very cool because you start in your mind calculating the odds very, very quickly. And you start to say, okay, this is a okay trade. This is a great trade. This is a trade I'll take. Oh, wait, this is one I'll stay away from. This is one that I think will break down versus I think will bounce. It's very meticulous, but it's not super hard to learn, frankly. And again, I've taught thousands of traders in my life. I hope you guys are part of my student population as well, as I always try to bring my A game to these game plans and give you guys some real actionable trade levels as well as some insights and education. All right, it is Friday. I got to get to my trading room, guys. We're going to make some good money. We had a blockbuster $16,000 profit day yesterday in the live day trading room. Hopefully I see some of you guys there. You guys have a great one.